Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, the session will be a little bit different. I will be joined by my colleague, Norbert Kiza, and hopefully we'll get to deliver the best quality content today. So there's quite a number of things we'll be looking to cover. First things first, we'll be looking at the economic calendar and try to understand what we're expecting for the day. Second, we'll be looking at the result of the news that happened yesterday, which is the US CPI. And then from there, we'll be looking at a couple of charts to try and understand the key price levels and where the market might be headed next. So hello, Victor, Jacques, hello, James, Patrick, thank you guys for joining in. So let's get this going. How are you, Norbert?
Fine, thank you, Rufus. How are you?
I'm good.
Awesome. Yeah, just to thank you so much for having me on today's Market Snapshot. And I'm ready for it. And I also want to welcome everyone who's joining us on YouTube at this time.
Awesome. So let's begin with the economic calendar and see what happened yesterday. So on the highlights, if you go to any news channel, especially from the US, you'll notice a big highlight that the former president of the US, Donald Trump, was arrested yesterday. He pleaded not guilty to a couple of accusations. And now we are following up closely on the case, especially on the handling of official government documents after retirement or after his term expired. So that's one of the key highlights in the markets right now. So there are also concerns in the markets that that China might dump its US bond holdings. So that's also something that the market is concerned about. And of course, the tension between China and Taiwan keeps on getting worse and worse. And there are speculations that China could eventually invade Taiwan. So besides that, on the geopolitical front, yesterday, we had a very important data point that the Fed usually considers while it's making its decisions. And this is basically the CPI. So yesterday, as we were expecting the news, we knew that the previous reading was 4.9%. This is annual CPI. And the gain in April was 0.4%. And of course, for core CPI, it was also 0.4%. So the expectation was that inflation would slow down to 0.2% in May, but the slowdown was much faster than expected. So we had 0.1% gain in inflation over the month of May, which led to the consensus that the annual CPI is now down to 4.0% in the US. So for core CPI, it gained 0.4% as expected. So as a result of this, there's a belief that the Fed is achieving its targets. So by just focusing on the chart here, trying to open this part. Somehow my chart is not loading. I wonder why. All right. So the thing is, the US inflation has been dropping from 9.1% and now currently at 4.0%, way closer to the 2% level. And due to the lagging effect of interest rates, there is a good chance that on the meeting today, which is happening at 5 p.m., the Fed might consider holding interest rate level at 5.25%. So this is the overall consensus in the markets. And now I want us to now move on to Norbert. What do you think about the CPI that was released yesterday?
Yeah, CPI, like you've said, Rufus, I think we are seeing it's still on its descent. And of course, it's I would say it was a good result that we saw. Of course, the other thing, again, is that it's still, of course, far from the target for the Fed of 2%. But I think I would say, and I agree with you that the Fed might be achieving its targets with the rate hike regime that it's currently in. Maybe the other thing that's maybe that we might look out for, especially today, as we have Paul speaking later at 9:30 for the conference, is that we want to see whether they are going to indicate that there might be a possibility that maybe the core CPI, the year-on-year reverses, because that has also been their fear that if there are some other drivers, for instance, for inflation that are not maybe the energy, like the one we had last year we saw that energy prices had actually really skyrocketed in the US, and
Yes.
of course their fear was that if these energy prices keep rising, then it will also keep inflation sticky upwards. But we saw that now actually when oil prices started reducing, we also saw that inflation also started come down. But again, Rufus, like you said, if the peak for the inflation year on year was 9.1%, and it's now at 4%. I think what the Feds are going to be looking out for is that they somehow sort of like make sure that they do not have a scenario whereby the inflation reverses and start moving upwards. So I'm thinking, much as it's 4%, yes, and of course, we have been seeing that the decline for the year-on-year inflation happening. At least it's been on a decent, I would say, every month, moderately coming lower. But I feel like Powell today is going to keep mentioning that there are still going to be some concerns with inflation rising. And as well, also, Rufus, when we see some of the components under that inflation, most of them are actually way higher than they were before the pandemic. And so there's that fear that if they keep that high, then inflation may not be defeated. So I think for me, I would say the 5.25% might be maintained, but I'm looking forward to what he's going to say regarding why it may be maintained. But I think for now, they most probably are going to continue with the 25 basis points. For me, that's what I think, yeah. And much as it's still far away from the target of 2%, it means that the Feds are still most probably going to continue with their rate hike regime. For me, that's what I think for that, yeah. But of course, we also saw some kind of good moves for the risky assets. We saw that the indices have been moving upwards, even pre-CPI. We also saw that the pound dollar, the euro dollar, all those were also gaining upwards pre-CPI, but also at least kept some of their gains after CPI. So I think the market might be looking at the data as a good result. Yeah.
Oh, awesome. So personally, I think the most important data point for the day will be the FOMC press conference. So while on one hand, there's a divided FOMC, where some members are rooting for a strong rate hike, where others are choosing to hold. Judging from the data that we saw with the CPI, there's a good chance that they will hold. However, there's a key indicator that will also be coming up before the news. So today at exactly 3:30 p.m., we'll be looking at the core PPI, or the core producer price index. So if this data comes in slower than expected, meaning that forward prices are also cooling down, then in that case, there will be a very strong possibility that the Fed will hold rates at the current level. However, the forward guidance, which will be happening 30 minutes later at 9:30, will be the most important, especially judging from the questions that may be raised by the journalists, since they will be sharing about forward guidance and what the Fed might be looking to do on its next meeting in July. So it will be a very important data point. And of course, volatility will be expected to be very high for US dollar pairs, for gold, oil, as well as US top indices. That's the NASDAQ, the Dow Jones, and the S&P 500. So let's look at a couple of charts here. So I want us to understand some of the key price levels here. So for the FTSE, it still remains within a range, but now moving from the lower trend line could be headed back up to the upper trend line. For the dollar index, it was clearly bearish for the entire day. Managed to make some recovery during the New York session. Today, in the Asian session, it was going up, and now as we head into the London session, seems to be headed further back downwards. So with a weak dollar, we expect the pound USD to continue cruising higher. So potentially a break above this level would see us now think of the targets just above. So the target just above for pound USD is 1.26791. And of course, for Euro USD, still some further upside. So after pulling back downwards, then the very short-term intraday target seems to be yesterday's high. So I'll be very much interested to see whether the Euro USD retests this high again before the news. So USD CAD managing to cruise lower. So right now we have officially broken this particular trend line. So if I zoom out my chart, you'll notice it was a major support level. So having broken that on a weak dollar, if the dollar continues being weak, especially after the Fed hold rates, then there is a good chance we'll be seeing some further downside. And of course, the base of the pyramid of the pattern here seems to be a price level of 1.32247. So as for USDN, we managed to see the market bouncing during the news here from the lower trend line, going all the way up and breaching this level. So we have officially broken out of the triangle, and now the price is pulling back downwards. So if we happen to see a weaker dollar, then this particular trend line will be a target yet again. So we could be seeing the market maintain the same pattern and get back to this pattern. So in the books, there's a good chance that we will be seeing the price drop from this area all the way down to the lower trend line. But then if this doesn't happen, and let's say from the FOMC forward guidance, we see a much stronger dollar, then we will be targeting the top of the pattern. And this is where the resistance basically starts from. So 140.914. So for gold, there is a potential that it could be making some recovery after dropping all the way down following a successful test of this resistance at 1970. So went all the way down, and now today you can see it's making some form of recovery. So very short term is 1953 being a target for the recovery. And of course, after the news, if the dollar remains weak, then gold could reclaim the 1964 and potentially 1970. So this is a real possibility if the Fed comes in as dovish. But if it happens to be hawkish, then gold will be retesting this area here and potentially breaking further back downwards. So this is purely dependent on the news. So for today, any trader in the markets is very concerned about the news announcement. So we will be following closely to basically react to what happens in the news. So it's a wait and see kind of scenario. So as for Brent oil, it made some good recovery here yesterday after bouncing from the support of $71.6. So we have already completely reversed the momentum that happened on Monday. So on Monday, it was a straight up sell-off. Tuesday, some recovery. And then Wednesday, we completed the entire drop. And now there's a good chance we will be seeing some further upside, especially considering that from the forward chart, there was a major support level happening in Brent oil prices. So there is a good chance we'll be seeing even more happening later in the day. So it's a wait and see kind of situation. So hopefully we get to grab some opportunities today. So I'll be checking on the live comment section to see if there's any questions as we approach the end of the presentation. So far, there's no questions. Hello, Paul, Elvis, Tom, Ivy, Joseph, Anne, and Samuel. Thank you, guys. Thank you for joining the session. We always appreciate you. So anything else that is important in the market, Norbert?
Yeah, I think maybe the other thing, just of course, like we've said, we've been having a risk-off rally, and of course, we also we know that the risk-off rally has really been supporting the GBP USD. Now, if I speak a bit on gold, if you just go quickly to gold, yesterday I hope everyone was safe from gold. There was a bit of a whipsaw that gold had, and of course now gold is in a bit of there's a bit of indecision on gold. First of all, because a hawkish Fed, like you've said, Rufus, is most probably going to send gold to new levels lower. And then again, as we know, the US regional banking crisis seems to be at least out of the news for now. But in case it resurfaces, we'll know that it's a developing story. So that will most probably maybe bring in a bit of momentum to the upside for gold. But for now, I would say any indication of Fed continuing with its rate hike regime, and perhaps maybe not indicating when they're likely to pause, we might see gold break much lower. And then the other thing, of course, we're also seeing when you check on DAX, DAX has been having some really good upside momentum. Of course, we know that one of the pressures that DAX had was the Credit Suisse issue. But recently, we know that the takeover for Credit Suisse was completed on the 12th of June. So, of course, for now, I would say DAX is having some really good upside momentum. And of course, tomorrow's ECB meeting, Rufus, like you've hinted on, is most probably also going to, we need to look out for that meeting. If you're trading Euro USD and also the Euro indices, there will be a good indication for where we're going to continue from there. Yeah, I think for now, Rufus, really it's a risk off till we wait for Powell. And of course, we need to really look out for that conference at 9:30 East African time. Make sure that we are safe during that time. And of course, I know the market will take some time to digest whatever is shared. So I think maybe we might see the post conference move maybe tomorrow Euro session, and of course into Friday. Yeah. So I think that's what I have to say regarding that, Rufus. Thank you.
Awesome. Thank you. So the Euro stocks is making an impressive comeback here. So after forming a double top pattern in the past couple of weeks, we are seeing the market breaking this trend line and moving higher, which basically leads to the potential that we'll be seeing the market form a triple top pattern. So there is a good chance that with the increased momentum in equities, the Euro stocks could eventually get back to 4,412. So that's one thing to consider going forward for the day. So the US dollar against the Swiss franc managed to be quite volatile over the last 1 week. So with a very deep swing towards the lower side, and then an impressive recovery. And now from the price action we are seeing, for the traders who like trading breakouts, I think from the 15 minutes chart, we have an impressive setup here. And this is a very simple triangle. You only have to observe the direction of the break, and there you identify a potential trading opportunity. So for pound yen, a very strong bullish momentum. So after yesterday's news and this morning's news that the GDP was up 0.2%, there's a good chance we will be seeing some further upside in pound yen as well as other pound pairs. So with that, for the day, I don't think there's anything more to add. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. So just a new announcement. We have been doing these sessions from Monday to Thursday. So we have added a new episode that will be airing on Fridays. So now the market snapshot series will be moving from Monday to Friday, and on every Wednesday, we will be doing a joint session with Norbert, and hopefully get to gather more insights from Norbert. So besides this, our newest episode of the Bullish Banter podcast will be airing today. Make sure to join in. It will be available on Apple Podcasts, Google Podcasts, and all other streaming platforms, including YouTube. So once it's up, make sure that you follow through, and I can promise you there's some good banter in there, as well as market insights. So there's a good question here. Good day, Rufas. I'm new and you'll be willing to know how to trade. Help. So we have a Novice to Pro series. It's basically a very simple 10 episode course. It's available on YouTube. So just go to YouTube, search FX Pesa, and on that channel, you will find a very good course called Novice to Pro. It will help you transition from a beginner to a pro level trader. So most of this content we are doing, the candlestick, the trend lines, the news, they have all been explained in that series. So kindly go through that, and hopefully if you have any questions, feel free to join these daily sessions, raise those questions, and we will be responding to those questions right away. So do you do Sunday market breakdown? No, on Sundays we take a break. Everyone deserves a break. So for Sundays, we are completely off the markets. So thank you, guys. See you on the next one. And thank you, Norbert.
Oh, thank you, Rufus. And I hope everyone that was around was able to gain something. And guys, trade safe. We'll see you guys next time. Cheers.